Kman, Dr. Ashok, how are you? Sinatra, Mike, all you guys doing okay? Get through the week?
Good early morning, Dale.
Good early morning. Today is Friday, right, buddy?
Yeah, we made it.
Okay, so,
Big one.
got that turn in the end, but maybe, right? It's a maybe.
Yeah, we don't. Here we go.
Go ahead.
No, we didn't see your screen. Okay, now we got it.
Yeah, so getting a little bit of a pullback in Canada, but I mean, dollar actually hit a 1.618 extension. I remember Blake talking about 112. Here we are. So yen's trying to recover. Doesn't seem like it has the same type of strength on this recovery. Would you be a seller up here around 343.5?
Fundamentally, I don't see too many reasons to sell yen, but what I do understand is that people are getting out of yen crosses on the back of the rest of the dollars melting up, if we can express ourselves this way. Yeah, that's one of the things that I warned in the rooms and to people saying, like, be careful, because those interventions could actually put more upward pressure on other dollar pairs, and that's exactly what happened. And then for some other reasons, other currencies have been absolutely hammered this morning.
Right.
Yeah, so the yen is getting a bit of reprieve. Also, MOF saying they would be active if needed during holidays. So I reckon there's a lot of a bit of risk and cross yen selling going on as well. So that keeps the dollar yen in check right now.
Okay. What are you doing with your long silver?
I'm trading that. I'm trading my stuff a lot in and out. Well, a lot in and out. But my really long term, I'm just keeping it. Any add-ons, I'm selling back in around the mid to high 1980s, and I'm 19s, and I'm waiting for now sub 19 to perhaps start to catch a knife again around this
1860 or
around 1880, 1870, perhaps.
Yeah. Okay. I think you'll get your chance next week.
I think so. I think so.
And gold. Hey, Brian, and gold finally following through.
Yeah,
finally.
Broken.
Yeah. Wore everyone out, took out all the stops.
When you come into the UK?
I don't know.
Well, have you seen the rate? You could come over, buy a little holiday home, maybe Buckingham Palace at the current rate. You know?
I need the break sounds good.
That's fun. Hey, good morning, guys.
Yeah.
What? Hey, I gotta say this. What is happening over there in the UK? I gotta ask.
Well, the sun's not out, so that's probably why.
But was it something about a new fiscal plan was announced, and you guys just got the market upended on you?
Yeah, I said it first thing this morning in the chat room. We're going to get all this stuff coming out. It's all going to be fanfare, tax cuts, this, tax cuts, that, saving everything, blah, blah, blah. And then people are going to get into it and get the calculators out and tot up how much it's going to cost and what's going to happen with the UK, obviously increasing debt at a time when interest rates are shooting up. And duly, we got the rally on all the headlines. And then 10 minutes later, when those calculations were done, it took a pasting. We were above 112 at one point when those lines were trotting out.
Yeah.
So yeah, we're
like Niagara Falls.
Yeah, I think it's far overdone. I think, again, saying this morning on the flow show in the chat room, we're getting to a point where this is becoming too one-sided generally in the dollar, and something's going to give soon. There's no way countries and governments can let this carry on as it is.
But I was going to say, but the problem is it's not just the dollar. I mean, it's yields everywhere, right?
Yeah.
I mean, that's the problem. Paul Franco he was out there warning everybody yesterday. Paulie, SPZ trader, for those of you that don't know, he was in our community yesterday, just warning everybody, like, watch these yields, and I thought they would have peaked
after the Fed.
Well, actually, I thought we were at pretty key levels yesterday, so I thought I was pretty safe going into the overnight market. I did not expect to wake up to this. So anyway, I just need to say that. I'm going to let you guys go around the horn a little bit.
It shouldn't be unexpected, though. We've been saying about the Fed, how they're going to have to go higher and for longer. I'm saying that for weeks. So this yield move is not a surprise to me at all. But it is to a lot of people who didn't. Perhaps it's the fact that people didn't really understand that the Fed would, and central banks in general, would have to keep going on hikes.
I was going to say, I don't think it's so much not expecting the move, because the move we've seen, it's just the extent of the move. Like I was thinking, I was thinking yesterday, okay, that's enough. We've done all we're gonna do, and then
but then everyone thought, central banks are going to be topping out at 3.5, maybe, towards 4%. Now they're thinking central banks are going to be topping out at 4.5%, 5%. What happens 6 months down the line if we haven't got inflation under control? 7-8% we're topping out at. How long's a piece of string? We're far from done in this, I believe. Far from done.
Right.
Unless, there's a ceasefire or a settlement in Ukraine, I think you're right. And that's a long shot. That's a long shot.
Yeah, we could all be wiped out in 6 months and none of it will matter anyway.
Yeah.
I'm in a bitchy mood this evening, or whatever it is.
Dale, you got to ask the question, or I'm going to ask it to Ryan. Did your football club lose overnight, or what happened?
No, but I missed a massive open goal yesterday in Euro Sterling, so maybe I've got the ump about that. I'm banging on about jumping into that 87, 86, 90 level, and I left it to go manually, and everything else just that was going on yesterday, I missed it. And,
that would make me pissy too. Hey Dale, do you mind if I take over the charts here? Because I've really got to. Well, first of all, let me ask you, Dale, since you talk and discuss markets all the time, how are you feeling about the equity markets right now? Before I flip them over to the charts. This is, by the way, this is the terminal rate that we were talking about, that Ryan was just talking about. What's that?
They look ugly. That trend line break, I respected it a couple times, and doing like gold. Everything's going up together, down together. So it is. But I wouldn't be sure. I just wouldn't be short right now, just in case we don't take out the June low before we bounce. But
all right, we just completed an equal leg AB equals CD. It's something that if you're in the ForexAnalytix
you used me for a segue.
Yeah, I did. No, I did. I asked. I wanted to ask this of you because I wanted to, make sure that you were on the same page as me. But if the markets are going to find some sort of low today, this is going to be it. And I don't know if we're going to go lower or not. I'm just going to say that we've just completed a pattern. But the analysis that was sent out this morning, and I'm just going to make sure you guys all read this, is, as long as there's nothing bad that materializes in North American trade, you're going to get a recovery here. You're probably it's going to be Friday. People are going to, start to take back their shorts, as long as we don't see the equity markets, the open doesn't turn really sour. We don't see any further moves in bonds. But, if you look at the bond market, let's just go take a look around the world a little bit. Let me pull them up really quick. I have to actually start rearranging some of this stuff. Sometimes you throw so many symbols in here, just, you have to put them in different pockets. Anyway, if you take a look at the bond market, here's treasuries, here's the US Treasuries. We hit the 127% extension, 30-year hit channel resistance. Here's the gilts, and that's ugly. You can see why the cable just got absolutely smashed overnight. Here's Boons. Boons hit the trend low, right? So, you can see the bond markets have gone pretty far, and so this would be a realistic place for the stock market to find some sort of support. How would you guys express that? Let's just say that it's Friday, we get a little bit of recovery. Notice I'm not drawing this, right? I'm drawing this. We get a little bounce, which, no markets go straight up or straight down. You tend to get recoveries here and there. How would you play that? And I'm gonna start with Kman. I haven't heard him in a bit. Kman, how would you play an equity market recovery if, let's say, Friday, the rest of the day, the market starts to recover? How would you play it?
Well, you mean in other markets or just for the S&P?
No, in other markets, or would you play just the S&P? That's a good question.
I mean, if you get a recovery rally, that's exactly the name you use. It's probably a correction. Don't forget, next week it's end of month, end of quarter. I don't know what's going to happen, but if you look at the yields, if they continue to go, I don't see how it can be more than just a bit of a correction.
Right. No, I'm asking just for today. So for today, today, let's say Friday, we get a nice little bounce going into the end of the week. People are, take back their shorts. How would you play that?
If you get a bounce in S&P, which would be understood as a bounce in risk, then maybe you try to pick a bottom in cable, for instance, because that's gone the furthest, or you try to sell some dollar mix. I don't know, dollar Canada perhaps. If you look at the correlations, but I wouldn't touch sterling right now. No, I'm personally, I'm not touching it.
I actually touched it this morning.
Yeah,
I touched it, and I'm actually quite nervous right now. I'll tell you that much. And I'm profitable, and I'm still nervous. So
no, I think the market really got scared by what the government is doing, and then the inability of Bailey to control anything.
So let me just show you guys. Yeah, Bailey's going to have a hell of a job on his hand. This is the 20-year wedge. Just show you guys a descending wedge. We broke out in 2000. I'm sorry, it was a 12-year wedge. I just misspoke. It's a 12-year wedge, and we had mapped this out obviously a long time ago, back in 2020 when it broke out. I mean, look, we're back at wedge support after a false breakout. That's scary, I look at that type of chart, and what these false breakouts tell me is that we're going to eventually break down, which means that, guys, I might actually have to take a trip over there to London, next year if things continue. We break through this 110. I mean, it could get really, really, really ugly. And I know the problem is you guys have a whole new government, and it's scary. Anyway, just something observation. Stelios, we heard you. How would you play the and TGIF? How would you play a Friday bounce? Would you play? And let's say it's not.
I think you know what I'm going to say. Actually, no, you don't know what I'm going to say.
I might.
I'm not going to touch
silver.
sterling.
You're going to buy silver.
No, I'm not going to touch sterling. I would be selling dollar Norway, which is getting very close to levels that I'm really interested in.
Ooh, you're getting
between 1050 and 1060.
Sexy and exotic. I like that. Okay, yeah. You've been talking about, and I'm going to take a step back and say, in the ForexAnalytix community, when we're done here, we do the morning edge. Yesterday, to just the ForexAnalytix traders, you said, Blake, I really have been looking to sell the US dollar Norway 1050 to 1060. And I'm quoting you. So
yep. So that's what I'm looking at.
Well,
I think you're right.
I think 1054. So
yeah.
split the difference of what you just told us yesterday, and that's golden.
Yeah.
Wow. Well, all right. Well, okay. So why are you going to sell US dollar Norway? Why is this a pullback potential trade?
Well, there is a retracement which is at 1060. I think it's a 61.8 from the COVID highs to the lows. If I recall correctly, I need to go back to my chart. But
we'll go find out right now.
Yeah, have a look.
That's correct, Stelios. Stelios, that's correct.
There you go.
It is
1061,
1060.
1062, something like that. Yeah.
Yep.
Plus, it's, I know that the market tends to take the chrono with it, when commodities crash, the chrono crashes as well. But overall, it's a currency that I really, really like. And I always play Euro Norway, Dollar Norway to the short side. And I try to find levels that seem like they're good risk reward. Now, of course, it could go wrong, right? Every trade can go wrong, but I just think the odds are stacked. Especially today, like you said, on a Friday, after this morning's move, maybe there's going to be some kind of reprieve, but it is risky. You don't want to go against the market like this. But if I'm going to pick something, this is the one I'll pick.
Oh, I like it. Hey, and let me just stop here for a second. And I obviously I'm going to ask the same question about the S&Ps. If Steve is here, I'm going to ask him. If Dale, I'm going to ask him.
I'm here, mate. You need a segue.
And I'll think about asking Ryan what he'd want to do. Just kidding, Ryan. But really, I want to say this. I've been in this game for a while, and I've been, I'm going on 26 years, in front of computers trading, and I'm going to tell you the attitude from everybody. 100% of the time, when you have excessive moves overnight, intraday, everybody always thinks this is it. This is it. This is it. This is the day. This is the day where it all starts. And you know what happens 95% of the time? They're wrong. It doesn't. You just get a recovery and you kind of grind back, right? This, if we're down, let's just say right now in the futures, right now we are down. Let me just make sure I got the numbers exactly correct right now. Pre-market, we're down
50.
1%, percent and a half, whatever in the futures. Everybody, looks around overnight and they see all these big moves and they say, oh, this is it. This is the day that the Dow is going to be down 10% and we're going to have, the S&P is going to crash, 7%. It doesn't always happen that way. Matter of fact, most of the times it doesn't. It doesn't mean
you're right, Blake. It's rare.
It doesn't mean that doesn't mean that the trend is not intact, and it doesn't mean that we're not going to see an eventual move lower in the S&P, another 10%, from higher levels. But the markets tend to do this. They tend to go down, then they go up, and they go down, and they go up. I don't have to school you guys on that, but the point I'm trying to make is, everybody looks around and always says, especially traders, it's usually that just the retail crowd runs around and they're like, the bottom's going to fall out of the market. And, and you look at the sterling and you look at gilts and you go, oh man, this is the day that we break parity, and it's like, all right, well, as Kman pointed out, we've gone pretty far. And unless something just completely unravels today, chances are we are going to get some sort of bounce or recovery. Now, and like I said, that's just a more high probability case. I just wanted to point that out because I know what's going through everybody's mind right now. You see these overnight moves and you're like, holy crap, this is it. This is it. Armageddon. It's going to be here like in the next 15 minutes. But that's most of the time not the case. All right. With that being said, let's go back to our example of, let's just say it's a Friday. We're down 1%, but by the end of the day, we claw back 1%. Maybe when we close the day up 0.25%. So, the S&Ps bounce back a little bit. Steve, since I heard your voice, how would you play that? I mean, unless you're going to just go straight out by S&Ps.
I agree with everything you said before, but I have to tell you what I said yesterday on the morning edge. And what I said yesterday is that I've used this expression a lot of times. It's not mine, of course. We've seen the market slide a slope of hope, right? We have all the ingredients for a big sell-off, but market participants keep getting cheered up just a couple of days after something new comes up that should lead to a bigger sell-off. The thing is that I'm not sure that this can continue for much, much longer. And I think that we are probably getting closer to the point that the retail crowd is going to get really scared. And what I said yesterday is that, in my opinion, there is a much higher probability that this orderly pullback from the highs, we're roughly like 25% lower in the S&P, is first going to become disorderly before we actually find the bottom. I don't think that this market is going to bottom by just having a prolonged orderly pullback to 25-30%. That's what I think. So I wouldn't be buying this market. I'm actually still short this market. And I wouldn't be buying it for any reason. Yes, there will be rebounds, there will be pullbacks, but in my opinion, for every time we see one of these pullbacks and the crowd is getting again disappointed and then they sell it off, there is a less of a chance that there is going to be a next pullback and the next pullback.
Yeah. All right. Thank you, Steve, and I appreciate that. And matter of fact, if I had to draw that out, you know, via a harmonic pattern, it would look something like that. Take a step back.
I agree. A new low, like I think, is in the cards.
3,400, yeah, 34, 3,500. All right, so very good. But let's say we get that Friday recovery. Dale, how would you play that? Are you going to play it straight up and buy the S&P, or are you going to, or would you buy something else? Do you think you might get higher beta playing something else other than like Dale wants to buy Bitcoin? I know that, but what would you do?
Pretty soon there, 14 grand. I don't do much on Fridays, Blake. So we have a red week really across the board.
Yeah.
Potential for, we're getting some recoveries. Canada's come off quite a bit, and Aussie's holding up early morning lows. But I think I'm going to wait until next week to, take a stab at long Aussie and short cat.
Okay. All right. Sounds good. So you're looking at long Aussie and possibly short dollar cat.
Yeah, I'd like to buy Aussie around at a new low, like 65.30.
And I want to just point out really quick, the dollar Canadian's been perched above 134. I got asked the other day, with the dollar Canadian breaking higher, like, hey, Blake, what do you think about the dollar Canadian? This is in our chat room, by the way. If you just, you can scroll back maybe 2 or 3 days ago through all of our messages, but this is just from when I got up. So that is only about, I don't know, about an hour ago, hour and a half, hour and 10 minutes ago. So as you can see, that's as many messages just from this morning in our general chat room. But if you go in our chat room, and I was having a conversation with, I can't remember who with, maybe it was Raj, and he asked, hey, what do you think about the dollar cat? And I'm like, well, while we're above 34, you don't want to be on the short side, because the 134 level was the breakout point from a 2020 high, channel resistance. So that's not, like Dale, you got the overthrow, right? But what I need to point out today is that we did hit 161% extension of the last major move. A break back below 134 would also create, Dale, your famous, what do you call it?
What, throw over?
Yeah, throw over. I always called it overthrow, but I almost called it overthrow. Throw over, yeah, and which would set up for a really, really nice reversal. So I think you got their eye on a really, really interesting one. And I want to also say that we just hit brief new highs. Relative strength is very divergent. So we could actually see that roll over today. So great choices, Dale. I'm going to ask Ryan. I said I wasn't going to, but I do like Ryan. And I'm upset that he's like in a pissy mood. So I want to make him feel better. Ryan, how would you play? I mean, if the S&P got the Friday recovery, again, we're down 1%, but by the end of the day, we kind of closed flat. We maybe we're up a little bit. Would you play the S&P outright, or where are you going to get your beta play?
No, I would look at something like cable. So
Kman said, I'm not going to even touch it with Ryan's money, but Ryan said, I'm going to touch it with my money and Kman's money.
I've already touched it. I've just bought a bit of cable.
Good. I mean, misery loves company.
Yeah, but I'm in
1044. So
what Dale really wanted to say was he doesn't want to trade on a Friday. He just wants to go down the pub. So I'm joining Dale. I'm joining Dale down the pub. and you can keep an eye on the trading screens.
Ryan, I just want you to know that I always have a spare bed available here in case you need it, mate.
Wait, so you're gonna get Ryan drunk and then bring him home? Wait,
I can't afford to leave the country.
You guys got to clarify this situation.
No, I mean, if he finds himself, without shelter.
I can't afford to leave the country, Steve. Have you seen the rate?
all right. Okay, cool. So Ryan, you bought a touchdown here. I know you guys have been talking about the euro sterling a lot, and this I focused on this one on the trade-off this week, and I'm like, hey, a move above 87.20, and I bought it 2 days ago at 87.20, picked it off. I was like up 10 pips ahead of the BOE, and I let go of it, and I avoided this disaster here yesterday because of the BOE. But we closed back above 87.20, so theoretically we're still in breakout territory, and boom, there we go. So now, we're out. Now we're testing levels we haven't seen since the lows of 2020. Are you and Kman? Are you guys doing anything with the euro sterling up here? I mean, we hit 127%.
I'm not. I think that maybe could be the trade of the week, particularly that I missed yesterday. That moved to 86.90, 86.90 yesterday. I've been pumping that, but I didn't leave any orders in. I was going to try manually and just completely missed it.
I mean, that's something. It's hard to fade it while you're above that level. I mean,
it's a technical perfection, if you like. Touched and off it goes. But you can't trade backwards. Hindsight's a wonderful thing. Got to move on. I'm a bit cautious with this move in the pound. It is the pound on its own, and if it snaps back, it's going to snap back hard. And he could get back down to 87 just as quick. As for Kay, obviously he can answer that one, mate.
On the euro sterling?
Yeah.
Just asking, are you doing anything on the euro sterling?
Not selling it, that's for sure.
Okay.
Would you sell it with Ryan's money, though? That's a question.
Yeah, that's a better question.
But if the Greeks would start to repay some EU funds, I think maybe start to trade with that money.
So never.
Alexander says this is why Greeks get a bad reputation. And
Steve,
he's laughing.
Can I ask a question to Steve while we're here?
Absolutely.
Hey, don't you have the impression, I have, and anyway, that we are starting to see patterns like 1980s when Volcker was ramping up the US interest rates, and the dollar couldn't find the top for the whole period.
Absolutely. And I still
your images come really, really back to me.
No. I totally agree with you. I don't currently see why the dollar would stop under the current conditions and circumstances, right? We have an ongoing divergence of monetary policy across the two sides of the Atlantic, unquestionably, right? And at the same time, of course, we have risk off, which is another push, for the dollar, right?
Oh, exactly the same then.
Yes. So in my opinion, it's a very, very, very hard bet to try to fade the dollar.
Yeah, I agree.
I wouldn't even do it with Ryan's money, just to give you an idea.
and until they say stop.
Hey, real quick, we have do we have data coming out today? I'm sorry, I gotta look. What's that?
Canada retails, and then a bit later we've got the PMI.
PMIs. Okay, Canadian retail sales. I'm going to pull up the dollar CAD, but I want to hear from Gregor really quick. Gregor, would you buy? And I just saw him. That's why I wanted to ask him really quick. I wanted to say, first of all, happy birthday, Gregor.
Thank you.
I mean, what? You're exactly what? 29 again?
Yeah, I'm probably the only one in the team that has a 3 in the first place.
Hey, that's rude. That is just rude.
Yeah.
Also very true.
Also true.
But I'm coming behind, so don't worry.
I don't know what you're talking about, Blake. Personally, I'm 18 with 24 years of experience.
All right, we got just a few seconds here. Shoot. Well, I'll ask you after the data comes out, and let's go ahead and pull up Data Flash really quick. so we can get the Canadian retail sales. That's on your ForexAnalytix platform.
Expectations are for -2, so quite a worsening.
Oh,
and
red.
it's even worse.
So red.
Wow.
It's even worse. -2.5, and core retail sales from expected -1.1, they came actually to -3.1. We also have downward revisions to previous numbers. Needless to say, I'm going to say it for the billionth time, retail sales are not adjusted for inflation. So that means that even, if we even adjusted for inflation, that number would be even more horrific, right?
Keep hiking, central banks, keep hiking.
Yeah, you guys are doing a great job. But I wanted to ask Grega, if the S&P gets a little bit of a recovery going in North American trade, how would you express that trade?
Yeah, I mean, if you're word dollar long, then probably go out and book some profits. I would not be looking for any kind of a new trades here on Friday. But if the US yields would come down hard, let's say if stocks would rally, then maybe it would be worth to look at dollar yen. I mean, with this intervention, Japanese yen is looking attractive, and if dollar is getting sold off, I think the dollar yen would be even lower as well. So I could be looking for a trade against that top that we have in place on dollar yen.
Yeah, I agree. And somebody made a chart of the day yesterday about that exact thing.
Yeah, and the dollar yen's up today, but it's really kind of taken a back seat to the moves that we've seen in the sterling and the euro and the Aussie and blah blah blah. Overnight.
I mean,
all right,
where the yields are, the dollar yen is holding quite well down here. So I think if the yields would turn down, if stocks would stabilize, dollar yen could be trading much lower.
All right. Thanks, guys, for all your comments. Dale, I know it has an interview, but let me go ahead and just mention this because this did not happen the other day. Is this correct? Still,
yeah, it's coming live within the next hour or so.
Yeah.
Okay.
Prices are going to be changing today. Yes.
Okay. So just here's the thing. I'm going to tell you guys what's happening. Just so everybody's here. We are raising our prices for the first time in 4 years towards the end of this month, like at the end of this month, and we're going to be raising them from 119 to 189. That you guys know that, right? Some people said, okay, well, we're going to take advantage of that. We're going to buy it for, the better pricing, that you guys have up here. We are actually going to even lower it further. And Stelios, what are those discounted amounts? Because I don't know.
So just for the next week or so or two, until we actually move to the new pricing, it's going to be $99 per month on the monthly, and then the 12.5% discount and the 25% discount for the semi-annual and annual. So that's for people who want to get in now and lock it in.
Yeah, and if anybody over the last week that we've been talking about this, like the last couple of days, they got the premium or whatever it is, we're going to automatically just discount.
Yeah. They're anyhow still in the trial period, Blake. So whoever during the past, let's say 10 days, got the trial period, we're going to adjust the price, so they're going to take advantage of the discount. This is the seasonal discount we do every September. Near the end of every September. So we're going to give a slight discount to the current prices. But as Blake said, once this discount goes away in a few days, by the end of the month, then the prices are getting not back to where they are at the moment, but 189 the monthly and the equivalent 12.5% discount to semi-annual and 25% discount on annual.
Just to make it clear, if you're on the trial now, you're already locked into whatever to the rate that we have before the increase. Okay, so don't worry about that. If you're on the trial, you're going to get the pre-increase rate. Okay.
And then once you have that really good rate, keep it, because you're going to be grandfathered. And that's we have people that have been with us since day one that are paying substantially less than what you see here. Because when we did our previous rate hike, I can't remember, but I think we went from like $80 a month to $120 where we're at here. And then now because of inflationary pressures, because of what Amazon servers cost, and
plus we increase we increase what we offer, right? Every year we give out more stuff, more people to the team. So we
actually added these great new guys on the team, Ryan and Kman.
Yeah, we drink far more than the other guys. So
They do. They
Cayman
lapse us on stuff.
Cayman and soon to be homeless Ryan.
Okay, guys. Dale is your guest here.
Dale's got his interview, so we got to go. Yeah.
Yes.
We got to go.
Yeah, you got to hear the commercial.
Yeah, I'm sorry. It's
okay, buddy.
This is not something that we do every day, but this is a really important benchmark for us as a company, and it's an important change that we're making for all of our, our customers, new and old. So, and it's a big deal for us because we just don't do that. We haven't raised prices in 4 years. So you can see what a big deal it is. All right, guys. So have a great weekend, everybody. Good luck. I'll see you guys during the week ahead video that I will be filming. And I want to thank Grega, Ryan, Kman, Steve, Stelios, all the rest of the ForexAnalytix crew, all the support that the ForexAnalytix community gives us. And Dale, always thank you so much for hosting us. Let you go here. All right.
Cheers,
all right.
Bye-bye.
See you, team. Hi, Lori. Thank you for hanging out.
No problem. Hey, Dale.
Nice to meet you. I did find you. So, yes, really welcome. Reached out to you on Twitter. If you want to use cameras, we can. If not, no problem. So
It's up to you. We can use cameras.
I'm sure you have some charts to look at. So, Lori, if you want to share your screen, why don't we start with that?
Okay, perfect.
So everyone, this is Chart Gal Lori, and you work with the chart guys. That's the name of the company, right?
Correct.
Okay, the share screen's at the bottom. You just move.
Yeah, I'm trying to find my screen. I have six monitors, so I overdo it, of course.
You work in a spaceship.
Yes, I do. And I am having, I guess this is it.
Yeah, there you go.
All right, perfect. Well, thanks for having me. I really appreciate being here. And I was listening to your webinar and all of these smart people. I kind of felt a little intimidated to join this group. Really nice information.
Yeah, a lot of people have been at it for a long time. And, we believe in educating people and giving them some actionable ideas. So why don't you tell us a little bit about your journey? What were you doing before you traded, Lori?
I was doing healthcare management. I did that for about 20 years. I started when I was 5, of course, and I managed physician practices. So my background is I have an MBA and I love all things business. I sold my business when I was 40 years old thinking, oh, I can retire now. And I go look at my 401k at the time, IRA, and everything had been put into a REIT. My financial advisor put it all in a REIT for 12% commission. I couldn't get it out. And I was just dumbfounded. And I come to find out she wasn't even certified to do what she was doing. So anyway, I said, with my background, surely I can figure this out. Well, they don't teach you about stocks in business school. I mean, barely. No. I can read a financial statement, but that doesn't help me with technical analysis. So then I just did a deep dive. I found myself at TCG in 2017 with my ego in my hands because
what's a TCG, Lori?
Oh, the chart guys. This is who we are.
You found them. Okay.
Yeah, I found them in February of 2017. We teach technical analysis, and Charting Man Dan and Jason started the chart guys, and now I'm a chart gal. I'm a partner with them. And I guess the rest is history, but
congratulations. On making a good choice. You could have chose the chart frauds instead of the chart guys, right? You did.
I did, and that's why I arrived at the chart guys with bags full of UGAS because I was with this. I don't want to say a bad group, but a group that wasn't teaching technical analysis. They weren't there, but they weren't teaching the basic components of price action. And that's what we do is we teach really the basic components of price action. It's king, queen, prince, and princess. So all these other trying to sell indicators, which is awesome. Indicators are wonderful, but our focus is price action.
Okay. And risk management?
Oh, absolutely. Risk management, stop losses. We preach stop losses. We say it's like a seatbelt. You don't get in a car without putting your seatbelt on. You don't get in a trade without an exit plan and a stop loss. Absolutely.
And you know your target before you pull the trigger.
Absolutely. You have to have a trading plan. You have to scout it. I say it's kind of like, I mean, I just talked about fraud and I'm going to use a crime scenario, but it's kind of like robbing a bank. Before you go in, you have to know where the vault is. You have to know what you're expecting to get there. How many minutes do you have on the alarm before the cops show up? And you don't go in just for $1. That risk isn't worth it. But you can't try to get your bag full of all the dollars or you'll get caught. So
you're like the reincarnation of Bonnie and Clyde.
Exactly. So we plan the heist and rob the market every day. That is my tagline.
All right. So we're looking at the dollar. Where do you see the next heist? You're showing some divergence, I see.
Yeah.
What are your bands there?
This is the 8 and 21 EMA and then the 50 simple moving average. The yellow candles are inside bars. Again, with price action, we're constantly looking for possible equilibriums and higher highs, higher lows. But these yellow bars help my eyes kind of tune in to inside bars and tightening price ranges. Where price is compressing, I'm always looking for that price compression. I call it an Instapot, where pressure is building, and then I'm looking for that explosion with follow through to the upside or downside. So that's why I have the squeeze down here at the bottom.
Okay, and how do you use the squeeze at the bottom?
The squeeze, and you can typically see it with price action here. When price is going sideways, that's when that pressure is building. And then when it really starts to compress, the TTM squeeze actually measures the Bollinger Bands. And when the Keltner channels come inside the Bollinger Bands, that's when you have max pressure. So that's what I'm looking for. And again,
so it's like compression of a market. It's consolidating, or there's a battle going on between support and resistance, compression in the market, and that's where you look for the springboard or going over Niagara Falls.
Exactly. Like we have pressure in Cigna right now. We're sitting on the daily 50 MA. So we do have a little bit of support here, but I like this pressure that's building. And when typically you get a firing, which this could be to the downside, which would be yellow and red. When we fire to the downside, i.e. break support, then you typically get really good follow through. So I look for those setups often.
Okay, so I'm curious, you came in here with the dollar and your indicators, you have a view, or how would you trade the dollar the way you're seeing it right here? And to do nothing is also an option, right?
Do nothing is absolutely the answer right now. If you don't have a bull position, you're chasing. And again, y'all are Forex experts, and it's literally the only market I've never traded. I've traded everything, and I trade everything currently. You know, I'll be in one or two trades at once, but I'm constantly looking for the market that's moving. So I'm coming to the currency experts, and I'm bringing up the dollar. I don't know that that was that smart, but I don't think if you have a bull position already, there's no reason to get out. As long as these hourly EMAs are below you, you're fine. You have an hourly bull flag. But I was denoting the 4-hour bear divergence, where price is making a higher high and RSI is making a lower high, but that's not a reason to enter a trade. That's a little extra edge. But if price confirms on a lower time frame, see if we get a 15-minute trend change to the downside, then that could be a possible entry, and you'd put your stop above 112.352. Just say, okay, here's my measured risk, and this is a counter trend trade. So I do counter trend trading, but I have my risk clearly defined, and you're in those quickly. You don't stay in counter trend trades for a long time. You have to go in knowing your counter trend, and bulls that miss this ride here, they're just waiting to get back in over here.
Okay. What would you say are the markets you mainly focus on? What you have on the right-hand side, those are your markets?
Yeah, I monitor the market internals very closely, the dollar and US 10-year. I primarily trade ES. I trade SPX options. I sell premium, and or I trade ES futures, or a combination of both. So I have some option selling that I do where I sell premium for income trading, and then ES is my day trading vehicle primarily. But because I'm a chart gal, I have to be kind of versed on all of these. So US 10-year is really making a push overnight. We're at highs we haven't seen, I believe, 10 years. I mean, this is the chart that bulls dream about. And this is a major headwind for equities, major. And it's the same thing with dollar. It's very difficult for the equities to get off the mat with this type of strength that we see in dollar and US 10-year.
Exactly. And there are no technical signs of it ending.
None whatsoever. Of course, we have an hourly topping candle right now in US 10-year, but
it's a 4 hour. Yeah.
Excuse me, 4 hour.
Yeah.
Yes, a 4 hour. We have a topping candle forming. It's not confirmed. We have what? Oh no, it's almost confirmed. 15 more minutes, but it's there's still
not
no
red yet.
No, it's not red, and we're holding hourly EMAs, and we're holding hourly higher lows. 3.679 is our last hourly higher low. We're still in an uptrend. This is healthy consolidation. So there's no reason yet for me to buy. The only divergence that I see out there besides the dollar RSI divergence is Bitcoin. This is highly unusual. Bitcoin is one of the riskiest asset classes. It's typically thrown out the window at first because it's a risky asset class. We have enough room for a 4 hour higher low here. That's some major divergence. Now, I'm not saying this glimmer of hope means go out and buy all things, SPY, but I do think it's something we need to take note of. We do have a potential daily bear flag on Bitcoin. We have that compression again. We have these inside bars, 2 daily inside bars, and we can see the pressure building on the 4 hour. So this is the one glimmer of hope out there that I see for market bulls if you were looking for a potential oversold bounce today. But again, the indices themselves are giving us no reason to get in long.
How about one more low that would complete a 3 drive to a bottom formation?
Possibly that could be it. We didn't hold this 3723 this morning, but at this point, a break of $7.
Bitcoin.
Oh, I'm sorry. Say it again.
One more low for 3, whatever chart you were showing. Yeah. Okay. One more drive, take out the prior 2 lows and diverge for the second time above 30.
I like that. I like that trade idea. We have 17592. Yeah, I like that.
Okay. Well, I appreciate you coming here. Anything, what's the important lesson you've learned from the chart guys, and how long did it take you to make a breakthrough to be able to make, money in the market? And, I think we all struggle at the beginning. We've had failures, and, sometimes it's about getting even from our early mistakes and landmines that we stepped on. I ask people, Lori, you've been doing this how many years now with the chart guys?
I've been with the chart guys for 5 years. I've been trading for 7 years.
Okay. So how long did it take you to really feel like you knew how to be consistent?
To be consistently profitable, I would say it took me 4 years.
And no one's consistently profitable, right?
Well, I think the definition of consistent is relative, but I would say anything greater than 50% of your trades, you're consistently profitable. I have red days. Just like everybody else. And I have to reflect, did I not trade my plan, or did the trade plan just didn't work out? And that's okay too. But I have to be 100% consistent in following my trade plan. And that's what changed the game for me and risk management. If you continue, I call it, if you continue to garden and keep, just pulling out the flowers out of your garden and letting the weeds grow, you're not going to make money. And somehow with traders, we let our losses get away from us. And then as soon as we see green, we take it. So just letting those winners run and cutting your losers faster. Just remember, when you're gardening, you don't take out the flowers, you take out the weeds. And that was a big sea change in my trading. And it really helped my journey.
I really like that. When you're gardening, don't take out the flowers, pull the weeds.
That's right.
Okay, Lord.
Absolutely. And my analogy is my son was a downhill skier, and I would try to ski with him, and I had to get an instructor to help me improve. And she would say, "You're leaning back." Well, that's my body's reaction is to lean back because I'm scared, and you're supposed to lean down into the mountain, and it's counterintuitive, your natural tendencies. And I think with trading, our natural tendency is we see green, oh yay, but we see red, and then we want to be right. So we stay with that loser longer than we should. And it's fighting that natural tendency is how you get to the other side.
It's all in our heads.
Ain't it?
Yeah. So you're now my trading warrior sister. What's your business model? for people that are interested in working with you?
We have a monthly, so we have a swing report service, which I'm a part of as well. I just do the macro environment for swing report, and we have a community. We have Slack, and we have our major focus is commodities, futures. Of course, we do the high beta names, but we have a very active marijuana channel and uranium channel. So if you want to join, we have a monthly membership. You can do an annual membership.
Okay. All right. And that's at chartguys.com.
Yes, chartguys.com.
And you could follow Lori on Twitter at chartgallori.
Yep, this is who I am.
Really, it was nice to meet you. And you sound like if you walk your talk, you know what you're doing.
Well, thank you. I appreciate that. That means a lot coming from you. Thanks for reaching out and having me. This was really fun hanging out with you.
All right. Well, everyone, Chart Gal Lori, you see her. There's a shot of her, and she has all the elements, and she's been at it for a while. Check out her work, and maybe that's for you. And thank you, Lori, for your time today and coming to talk to us about how you see trading. And you're fortunate to, find a group. I'm a big believer in communities, and
absolutely.
Right. What good is anything until it's shared with another?
I agree completely. Thank you, Dale.
All right, Lori. So that's a wrap, everybody. Felt like Friday to me yesterday. Have a great weekend. You could join the team in 20 minutes on the Morning Edge. And hope you enjoyed the lineup of people that came in to talk to you today and this week. And, it's our mission to build up and edify traders every day. Feels like we did that this week, and I feel it. Anyway, have a great weekend. Let go, recharge, and we'll be here to, lay it on the court for you guys again next week. And remember, yeah, that's right, Bianna. Don't just count your pips, count your blessings. And thanks again, Lori.